Hello traders, welcome back to another video by Creative FX, and this is going to be a slightly different video. We want to talk about something that you should not do in the market. It doesn't matter what market you're trading in, but this is a very important thing that I feel like most guys, most of us, all of us, we make mistake on. And if you pay attention to this, I'm pretty sure it's going to help you. All right, with me right here is a pair Euro GBP. I remember this pair at one time I made an analysis on it, and I had a very beautiful analysis, and my analysis was that I am expecting to see a sell all the way up to that low right there where price is right now. So as you can see, I'm in the D1 time frame, so I was expecting this low to be hit by market price. And imagine if I was trading this pair, how much money I could have made. But there is something that made me not take this trade, which I would like to encourage, or rather advise people to also not take trades if you see the market do that, unless and until the market makes a move. All right, so today we are going to be dealing with what we call ranging markets. Okay, so as you can see, this market, if you want to measure the pips, maybe from the highest point or maybe from here, you can see that this market has moved 135 pips in one direction, which is a very good sell, and I'm very happy with how this trade turned out. Unfortunately, I did not take it, and reason being, it's because of this right here. So you can see how the market was ranging for almost a span of, say, this could have been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So that's like 2 weeks of no movement. All right, 2 weeks of no movement. Yet when I analyzed this market, I had seen a peak formation there, and I had seen a pin to the 50, and I was anticipating that the market was supposed to sell here, test the low, and continue going down. However, this did not happen. The market continued ranging in the same spot, and I remember seeing some people trying to buy and sell and all that, which is, if your strategy allows you to trade such kind of markets, it's okay. But for me, to be honest, I do not take such kind of markets until I see something clear that I can tell that, okay, this looks a little bit different from what I was saying, and then I see a drop, a consolidation in a drop. Then I'll say, okay, from here or from here, that's when I start to look for sell position, because I've seen a clear move away from that level. So ranging markets, or consolidation rather, are used by the market maker to accumulate orders. All right, I'm pretty sure you have learned this in every strategy as well. So consolidations are used by the market to get as much orders as they can, and at the same time to hit stops. So they actually lure people into the market just by using ranging markets. So then someone might ask, how then do I know this one is going to be a ranging market or not? So my policy is, if a dealer forms a low like this one right here, all right, and then he kind of goes up, all right, and then consolidates here, if he comes down to the low, I will count 1, and then I'll probably maybe trade the buy. Okay, let's say I'm anticipating a buy, then I'll trade the buy, and then I see him come for the second time. All right, and probably maybe it takes me out at break even or whatever, and then he continues to buy again. So that point there, which is a third hit, is my last point where I expect this market to actually do what I want. Anything after that, to me, it's a ranging market, because I know it will continue doing the same thing pretty much. All right, so I only give the dealer up to the third time. Remember the rule of three in Forex trading or in anything. The rule of three works, guys. So I expect the market to hit the same area 3 times. Anything more than that, I do not take it. So for example, here, I would have said, okay, I've seen you form the low, and because I'm expecting a sell, so I will say I've seen you hit 1, I've seen you hit 2, and I've seen you hit the third time. All right, so which is the fourth time is all on the same particular dates. It doesn't matter. And you come for the 5th time. That I ignore the whole trade and I look to for other opportunities in a different pairs altogether. Or sometimes I look at correlation of other pairs or the other pairs with this one and see how they are doing or if they are actually moving. Sometimes you might find the dealer might come to a peak and then start to consolidate there. Yet on an evenly correlated pair, he would have formed a peak and then started to move 3 levels down and hold this one. Immediately when he starts to maybe say reset and move 3 down, that's when he will start to move 3 up from this point. I don't know if that makes sense. So this whole move that you see here, he actually consolidated on that particular pair and only moved it when it was time to move this one on a new pair altogether. So this is one thing that I realized with this one as well, but I didn't take it, like I said, because every time when I see the market consolidate like this, I just let it be. I'll show you another example as well. Look at USD CHF. See what's happening right here. On USD CHF, I've been asked by certain individuals asking if we should take buy or sell or whatsoever. Now look at this. They form a peak right there, and what do? They go up there and they form what looks like a reset. So you'll be very happy that, okay, this is gonna be a sell or maybe a drop to the peak again. They form a peak again at this point, and then they go up again. And what do? They come for the 3rd time. So now the moment that they come for the 3rd time, if I take the buy, good. If I don't, then that's the end of it. I'm not taking this pair anymore. Now look at this. 1, 2, 3. All right. And same applies at the top there. They've given you 3 hits. So it means I'm no longer trading this pair. And I can guarantee you 90% of the time it becomes a ranging market. As you can see right there, it's been ranging in the same spot for a long time. So I will not trade this until the market breaks out from that level. So as long as the market stays within, you can see how they are actually closing their highs and lows in the very same spot. Now, I've taught in other lessons that if you look at higher time frames are actually building something different. So that's a topic for another day. All right. According to higher time frames, you can actually tell where the market is going, even if it's ranging. But if you're looking at the 1 hour time frame and you're trying to catch the market move, you'll find it's going to be difficult for you. So it will be easier for you to let go. So for those who've been trying to trade USD CHF, I would say just let it go. That's the reason why we have ranging markets, to trap traders in those buy positions up there and trap sellers in those positions down there. So as the market range, people will take in sell positions here, they'll pull away from them. People will enter buy there, they will pull away from them. When they come here at your entry, you'll feel like, oh no, it's time to move now. They take it away from you, you put more buy, they take it away from you, you put sell. That's how they then end up accumulating as much orders as they can. And when they are done with that process, then they move away the market. All right, let's look at Eurocard. I've seen the same with Eurocard as well. This is the 4-hour time frame, so it might be different with 1 hour, because 1 hour might actually have clear moves. But if you look at it from the 4-hour now, the 4-hour is actually showing you this right here. So basically this market has been ranging in the same spot ever since it got here. All right, it's been ranging in the same spot. So that means if they get to that high, we want to know what's going to happen. Probably maybe they might come back down, or they might continue the trend and go up, since they have been going up from this part right here. So that is how you see ranging markets. And again, because I'm viewing this from the 4-hour, you can actually literally trade it from the 1 hour. You can actually trade it from the 1 hour and count your levels and say, yeah, I've seen my level 3 right here, and I've been counting my levels, and this is where I am. This is a peak formation. I'm expecting this to be a reset, etc. So you can actually count from that angle. But again, if you are looking at it from the 4-hour time frame, depending on which time frame you love trading from, it's gonna be a ranging market on that particular time frame. All right, so I'm just trying to show you examples of things that you need to watch out for. Look at USD CAD. All right, I took USD CAD, remember the video that I made on at this point right here. Now, the reason why I took it from this point, it was because after having ranged the market, I saw the market break out of that area and closing outside that area. And that's when I knew that, oh yeah, now we are going down. So I wait for that moment where price actually moves away from that area. It actually breaks out. For those who do trend lines, you can actually put 2 trend lines there and say you broke out, you retest, and then you went all the way down. But that is what I'm looking for. I'm looking for the market to break out of that area, because to be honest with you, this is actually level 3, and this is why some people have challenges catching peak formations, because peak formations, sometimes they are gonna be W like this, which is very nice to see. Sometimes they're gonna form an M like this one right here, and that M looks very nice and clean. But what happens after that, you see continuous hitting of highs, and until the market takes out that high which you thought was an M, maybe it was news or whatever, and then after that the market quickly goes right back into the range. So it becomes confusing again when you are trading. So you need to be very careful with that. And remember what I said: if the market hits day 1, all right, day 2, and then day 3, and let's say you sold there, they came back, you sold there, they came back, you sold there, they came back, and of course here they were giving you lower highs, so you could have thought, oh, maybe it's time for us to go. And then you see on this particular day they are coming back to your entry. All right, now that means you need to run away, because whatever is going to happen next, they're going to hit your stop loss. So you need to run away. You need to run away immediately when you see the 4th hit, or you see the market coming back for the 4th time. You need to run away. That's a ranging market. That's how you identify, or that's how I identify a ranging market. Always when the market comes for the 4th time, I know they are not going anywhere for a couple of days. They're gonna be sitting right there. Another example again, with gold. Remember, I explained this in detail on another video, and as you can see, gold marked a high there. On the following day they maintained that high, and then they went down. They came again for the 3rd time on that same high there. So this is the last day of trading right there. That's your last day of trading right there. All right, now anything that happens after is just a ranging market. It's just a ranging market. So as you can see, you've got 1, 2, 3, 4, 5, 6 days of hitting the same high. So that on its own should tell you that this market is ranging. And the moment they come back for the 4th time, just get away, because they're gonna be sitting there for a long time. All right, anything more than 3 times, it's gonna be a ranging market. I'm just gonna show you one last example on Euro NZD, the pair that I took the ID50 that I took this week, the one that I was showing you. And again, as you can see, if you were counting your levels, this was gonna be a very good one. Now, the interesting thing about this one is that they did one and they came for you the second time. All right. Oh no, sorry, they maintained here the second time, they came for you the third time. So that means on this third day, that is when you were supposed to trade last, because the moment they start to come back to the same high, ideally they are not supposed to come to the same high for the fourth time. If they do that, then you know it's a ranging market. So as you can see, they came back for the fourth time again into the same range. All right, they came back into the same range, the 50th time on the 5th day, the 6th time on the 6th day, and the 7th time on the 7th day. So that tells you the market is ranging. So you need to do away with this pair and look at any other pairs if you still want to trade in that same particular week. Again, if you still want to trade the same pair, or it's the only pair that you trade, you then wait for the market to break away from that range and close out of that range. All right, and then wait for the market to break away for the second time and close away. It doesn't matter whether it closes in the same low or whatever, but as long as it closed away, now you know what you're looking for are sell positions. And again, you're looking also at your higher time frames, like the 4 hour. Remember, I saw this as an ID50 on the 4 hour. So you're looking at different time frames to see what exactly are they doing, and this will be showing you exactly that the market is now ready to move. And as I said, higher time frames are going to show you exactly what's happening. Here you are seeing countless taps of the high, but if you move to the 4 hour time frame, you can see on the 4 hour time frame it's a very good triple top right there. All right, a very good triple top, and then an ID50, and the market moved away. All right, so that's what I wanted to share with you guys, and please be very careful with this. You can check it on your charts. Everything that I teach you, please make sure you back test it, check it on your charts. But this is something that you need to be careful of. Every time when the market hits the third time, always observe price. When they come back for the fourth time, run away, because they are going to stay in that area for a long time. See you on the next one.